Cat's out of the bag, and it looks like I bought 2 new stocks in my Wealthsimple trade portfolio. And in today's episode, we'll be going over all the recent activity since December 20th till now that I've done in my portfolio. And all Patreon members have been alerted every single time I buy and sell a stock in this portfolio. And as well as some of those who are in the higher tier Patreon, they get exclusive access to my Quest trade portfolio, which is valued at over $300,000 today. If you're interested in that, links are in the description down below. If you guys are new here, my name is Daniel, and here on this channel, we talk about stock market investing. I focus on Canadian companies because A, I'm Canadian, and B, I do think Canadian tech is starting to pick up, and these companies are going to be the future of growth stocks in Canada. My journey began January 2020 when I started documenting my Wealthsimple trade portfolio on YouTube with people like you. So if you're interested in my journey and just all the different thought processes I go through every time that I invest in a company, you can check out my channel. There's a ton of content there. We have over 150 videos. Without further ado, let's jump right into my computer and check out what's been going on in Wealthsimple Trade. So here we are on my Wealthsimple Trade portfolio. You can see that my account's valued at $34,325.70, and it's up around 4% in the last month. Over 3 months, it's up about 16%, and over a full year, it's up 20%. And yes, I could have probably made a lot more on this Wealthsimple trade portfolio if I was depositing money at the lows when the whole pandemic hit. However, the reason why I didn't deposit that much money and actually go crazy into stocks was because I was actually saving up for a down payment for my house. So literally all my earnings from my job and from YouTube or whatnot went into paying that down payment, which is kind of unfortunate, but at the same time, the house that we bought right now has appreciated quite a bit ever since we bought it, so I really can't complain about that. So now let's scroll through my portfolio so you can see what holdings I have. So I have Absolute Software, Aritzia, Chartwell, which I'm actually planning to sell. However, it's down quite a bit, about 16% since I bought it. So I'm waiting for that to recover a bit, which will probably happen after the whole pandemic blows over. Then I have Converge Technology Solutions, and this is a new stock which I'll talk about later on. Docebo, Dye & Durham, CloudMD, Drone Delivery Canada, which has been on fire in the past couple of days. And I think the reason why Drone Delivery Canada is on fire right now is because of the stock EHang. And for most of you guys, you probably have never heard of this company, but Daniel Pronk did a good video overview on this company recently that I watched. And I think this is the reason why Drone Delivery Canada is up. So you can see since January 11th, the stock has skyrocketed by 53%. If we go to Drone Delivery Canada, basically it started its run up on January 12th. So very similar timeline to EHang here. And we can see that pattern is quite similar. So I think that Drone Delivery Canada did fall off of EHang's just hype, and people were looking for other drone stocks to buy into. Let's check another stock called UAVS. It's another penny stock, I think, in the drone delivery space. And yet this company is also up by about 41%. So there's been a lot of hype in the drone space recently, and that's ultimately why Drone Delivery Canada probably returned about 20 to 30% in the past couple of days. GDMP is another stock that I've been adding to my portfolio. And if you're interested in that, check out the top right corner. Canada Goose is a stock that right now I'm looking to sell out of. I'm hoping to sell out at maybe $45 right now, maybe $50 if I'm willing to hold it that long. But right now, I think that Canada Goose, because of all the branding behind it and just the society viewing it as a company that goes against animal rights, I think that's very bad for investors. And for that reason, I'm trying to get out of that stock right now. But it's still up for me about 6% all time. So I'm not sweating it too hard. Then going down further in the portfolio, we have H2O Innovations, Hive Blockchain Technologies, which I've been adding pretty heavily, Lightspeed Technologies, which I have some announcements to make about the stock. So wait till later on. Real Matters, which is a stock that I talked with my Patreons what I'm planning to do going forwards with the stock, as it's down about 16% in my portfolio. And I did call investor relations, so Patreon members were alerted my future thoughts on this company and where I think it's going. Relic Health Technologies is another relatively new stock in my portfolio, and I'll be going over the stock later on as to why I bought into it. Then we have Shopify, Storage Vault Canada, Waste Connections, which is a stock that I'm looking to sell out of soon, and Well Health Technologies. Now let's jump over to a spreadsheet where it gives you a quick overview as to all the buys and sells in my portfolio. So here you can see I made about 15 transactions here. I bought quite a bit of Well Health Technologies in blocks of 50 and 100. And then we can see that I also bought quite a bit of Hive around Christmas time, and I was averaging down into Hive. Then I bought Relic Health Technologies just before New Year's Eve, about 1,000 shares of that. And then I bought GDMP shortly after that, the day after on New Year's Eve. I believe this was the day after I launched the video. And then I bought some more GDMP on the 13th as the stock price has fallen down from 91 cents to 86 cents. On January 4th, I sold Brookfield Properties. And the reason why I sold this stock is because I'm shifting away from a dividend portfolio in towards a fully growth Canadian portfolio. So BPY just didn't fit that goal of this portfolio, which is ultimately why I sold it off. And I sold it off now because the price has actually come up quite a bit since its lows in March. I think it touched maybe like $11 or $12. So it came back quite nicely, and I figured now's the time to cash out. I did net a loss over this investment, which I'm not going to lose sleep over. And the reason why is because I bought it around $23 to $24, and I sold at a loss of $2 per share, which is maybe a 10% loss. Not terrible because I only had $755 in here. However, if I kept this money in BPY, and who knows where this is going to go, with Canada going into lockdowns left and right, I could be, holding the bag for this investment for the next couple of months or even the next year. So I didn't want to keep my money tied up in BPY. I figured I could invest this into another higher growth company, which has more future potential than just, me breaking even on BPY one day down the road. And then on January 12th, I sold some of my Lightspeed stock. So if we go to Lightspeed, we can see that Lightspeed's been on a pretty big run up. So on October 30th, it was sitting around $42, and it's gone up by 100%. And ultimately, that's why I sold off half my shares to lock in some profits. And I think that Lightspeed's run quite a bit ahead of itself. And the reason why is I think that there's a lot of competitors in the space of point of sales and just trying to help retailers with fintech technology. So I think that Lightspeed, it's gone ahead of its valuation, and I think that there could be a pullback. And if you guys have been watching Lightspeed stock, the stock actually shot up to like $95 the next day and $100 the day after that. But since then, like literally on the day that it shot up to $100, it pulled back down to about $89. So I think that there was quite a bit of aggressive buying into Lightspeed, and the stock did run ahead of itself. So it's on a bit of a correction right now. We'll have to see where it goes next week to see whether I was right or wrong about this, but ultimately that's why I ended up selling out of Lightspeed. And note, this was about half my position. And then on January 13th, I bought some DOC as well. Now, if we go over to the summary of what I bought and sold, we can see that I spent a total of $5,000 in the month of, December and January, and I sold off $3,000 worth of investments. And on the right side here, you can see the average cost versus today's price. And any box that is green means that I did better by selling or buying on the day that I sold or bought versus the price today. So yes, unfortunately, I didn't do as well on these 4 investments here. I could have gotten at lower prices. For Relic Health Technologies, it was quite a big decline. We're down about, I'd say, 10 to 20% right now. But I'm not really fretting on this because I think I'm holding Relic Health Technologies for the long term based off the technology solution that they offer. GDMP, it's pulled back a little bit. However, I'll probably be averaging into this stock over February. DOC, it's pulled back a bit, and I will be buying more next week. And Well Health Technologies, if it continues to stay at these levels, I will continue to average in. As I did mention, I'm trying to make this one of the largest positions in my portfolio, netting around 30 to 40% of this Wealthsimple trade portfolio. Now, you guys probably are wondering why I bought into CTS and Relic Health Technologies. So let's just go over quickly what CTS does. So Converge Technology Solutions, they are a North American software-enabled hybrid IT solutions provider focused on delivering industry-leading solutions and services. And that might be a whole lot of mumble jumble for you guys, but basically what they do is they're like a IT consultant where medium or small size companies will come to them with a IT need. So let's say they have like 250 employees that all need laptops, and they have certain database services that they need to store their data in. They'll come to Converge Technology Solutions. Instead of hiring out their team of 10 IT people, they'll just go in with their 2 IT people who don't know everything and provide a set of requirements for the system, and Converge will sell them different services based on their needs. And because Converge Technology Solutions, they are very knowledgeable in all the different databases or different IT solutions out there, they will be able to give the company that they're consulting for, the best options for what their requirements are. I think Converge Technology Solutions provides a much needed service for medium and small enterprises because these businesses aren't focused on their IT infrastructure. They just need something to get up and running for their employees to build technology solutions or just to manage a day-to-day business. And companies will save a lot more money by going to Converge Technology Solutions because they won't be overpaying for services that they don't need. In Converge Technology Solutions, they take a cut of the sales and they may charge a little bit of a premium for their services. However, to a company, it's well worth it because, as I said before, they could be overpaying for unnecessary services that they actually didn't need in the first place. So by them going to Converge, they're going to be saving money in the long run. Now, if we jump over to Finbox, we can see Converge Technology Solutions and their revenue growth, and it's been growing by 30 to 40 or even 50% year over year. And looking at the revenue numbers, they are generating quite a bit of revenue for their market cap. They generated $800 to $900 million in the past 4 quarters. And looking at their market cap, it sits around $770 million. This means their PS ratio is under 1. And for a company that's growing about 30 to 40% on their revenues year over year, this is quite cheap in my opinion. I think that there's quite a bit of value in Converge Technology Solutions, despite the stock running up quite a bit in the past year. It's up around 400% in the past year. However, that's because investors are catching on to this business and realizing that it is quite undervalued. And I think that you should take undervalue with a grain of salt. I think they're undervalued compared to the overall market right now. One thing you should note about Converge Technology Solutions is that they don't have a super high margin business. Their gross profit margins are around 30%, and they think that they could get it to about 30 to 35%. And I heard this from an interview that they did with SNN Networks, so check that out if you're interested in learning more about this company and how management thinks. And ultimately, that was the kicker that did it for me as to why I purchased Converge Technology Solutions. I think their CEO and their CTO have very good knowledge in this space, as they've been doing this pretty much their entire life. Another thing that I want to point out with Converge Technology Solutions is their revenue and how it's fairly cyclical. So you can see every time in the first quarter of the year, so between January and March 31st, there's always a larger boom in revenue. And that's probably because, company budgets have refreshed for the year and a lot more people are willing to purchase new services as they have more budget. So it makes sense they get a lot more sales volume in the first quarter of the year. The other company that I added to my portfolio is Relic Health Technologies. Basically, they're a virtual care, long-term care, and big data company. Some of the solutions that Relic Health offers is Ayugo Care as well as Ayugo Home. The Ayugo Care platform allows seniors to connect with their care providers virtually instead of having to go in. I think this is very big for seniors because most seniors, they're not very mobile, especially when they get older and older. They become more frail and can't walk as well. And this is where the other solution, Ayugo Home, comes in. And it's basically a patient monitoring device that allows the patient to be able to, press an emergency button if they've fallen or if they have some sort of heart problems. It can measure, their heartbeat and send an alert to either the authorities like 911 or to the doctor. I think this technology is going to become more widely adopted as we get more and more of the baby boomers entering into the senior ages. And right now, I think that there's a lot of kids out there who don't really want to have their parents live with them. And they'd rather just have this patient monitoring, be there just in case their parents fall. And so they can have full autonomy in their own homes. Their parents can live elsewhere. And this seems to be more of the trend, I think, with millennials and people who are in their 40s or 50s who really value their autonomy and their freedom. And they only want to see their parents maybe twice or 3 times a week. If you're interested in me doing a deeper dive on Relic Health Technologies or Converge Technology Solutions, let me know in the comments down below. So that's my quick Wealthsimple Trade portfolio update. If you want to follow along on my journey, consider subscribing to this channel, as well as smashing that like button as it really helps me out as a creator. And if you guys want to check out more Canadian growth stock content, check out these 2 videos here. I'm sure you'll enjoy it. And if you're there, I'll see you there. If not, keep up the grind and have a great day.